Hello there. Thanks for taking the time to view our short presentation on colored diamonds. My name is Doug Lowen. I have been a financial advisor for about 8 years, and then after that I've spent now the last 6 years in the world of colored diamonds, become a bit of an expert on this asset class, which is very unique. And I want to share with you just briefly on some aspects of this. And to start off, I want to show you some of the different collectibles that you'll be very familiar with. Anything from hockey or baseball cards, very unique and rare ones, like maybe a rookie Gretzky card, to an antique car, a rare painting, maybe some rare coins, or a natural fancy colored blue diamond. And what is it that these assets or these collectibles have in common? And for one thing, they're tangible assets. They're not influenced by inflation or interest rates. They have a very low correlation to the stock market. Basically, they act as a hedge against the market, which at times like this is very important. And the last thing is, with collectibles, the only places for price to go is up. And that's due to their growing rarity. Over time, collectibles become scarce, which pretty much guarantees their prices to rise, which is very different than the ups and downs of other asset classes. So now, what are some highlights of colored diamonds? They're the fastest growing hard asset in the world. They're currency all over the world. They do not go down in value, and they've never been poised to appreciate more. And this one I love. They're considered the Rembrandts of the gem world. So let's briefly look at what the experts are saying. The Financial Times says that certain types of diamonds, including colored varieties, have held their value over the past few years better than other more volatile equity investments. Bloomberg, over the past 10 years, from 2004 to 2014, the prices of natural fancy colored diamonds have gone up over 200%. And lastly, from Forbes, when times are bad, diamonds can hold their value better than real estate and have the advantage of being portable. So just some really key points from very reputable sources on what they're saying about this asset class. So I want to go to what I would refer to as Economics 101, supply and demand. And again, what some experts are saying specifically about these two areas. And starting off with RBC Financial, they say that the supplies of rough diamonds will fail to match demand driven by China and India over the next 5 years due to a lack of new mines. There are no more mines being discovered. In fact, the last Tier 1 mine discovery was over 20 years ago. Bloomberg says that by 2016, and keep that date in mind over the next couple slides, global demand for diamonds will probably outstrip supply by 7 million carats. Now there's 5 carats in a gram, so if you do the math, 7 million carats is 1.5 tons. Rio Tinto, expansion for diamond mining companies is difficult, given the lack of any major deposit discoveries in recent decades. And BMO, the world's largest diamond mining centers in Botswana and Russia have become mature. So you can see the theme here, whether it's from a financial or a bank or one of the mining major companies themselves, they're all saying the same thing. So I want to turn now to the largest production diamond mine, which is the Argyle in Western Australia. The Argyle is closing in 2020. It is considered the biggest producing diamond mine in the world. And this is interesting. It produces over 90% of the world's pink diamonds and the majority of the world's cognac, champagne, and chocolate diamonds. And Rio Tinto, again the company who owns it, they announced their production is down 20% over last year. So just a very brief slide on just the future of the Argyle. You can pause if you want to look at this greater, but I want to move through it fairly quickly. The 3 of the factors that affect prices on diamonds is size, clarity, and color. And with all 3 of those areas, the sizes are growing smaller, the clarity is growing lower, and the intensity is getting weaker. That basically shows that the Argyle diamond is quickly approaching its closure, which is making these stones rarer, and the prices are going up. Fascinating just what they've discovered from the period of 2001 to 2011, and that has just continued on to today. And that basically reflects what Sotheby's, which is one of the world's largest auction houses. It's actually been around since 1774. And they track prices of diamonds. And you can see on this slide here, over a 30-year period, just where the prices of pinks have gone in sale price at the auction house. And they have just grown exponentially, which is just a fascinating, fascinating story. In fact, I've known somebody who started buying pink diamonds in the late 80s, and his pink diamonds have grown 50 to 100 times. So it's pretty exciting to hear those kind of growth stories. So let's quickly look at demand and what is happening on the demand side of things. And KPMG says that revenue from diamond sales went up over 24% to $230 billion in the past 5 years due to surge in demand from China and India. The CEO of the Antwerp World Diamond Center says that China is expected to overtake the U.S. to become the world's largest diamond-consuming country in 2016. The New York Times says that while supply of new diamond mines is not expected to rise, demand from China and India is expected to rise steadily. So you can see again what is happening just next year in 2016 with both supply and demand. This next slide, again, I'd encourage you to pause on it if you want to look at it a little closer. But it's comparing several different commodities that most people will be very familiar with. Gold, stock market here showing the S&P, real estate, and this is actually based on a median price home in Calgary, oil. With all four of those asset classes, you can see that there's some great volatility, and that's just what we've grown accustomed to. But when you put the pink and blue diamonds on there, you can see that there is no volatility. There's very significant stability, and over time they just keep going up and up and up. So it's very interesting to learn that the up and downs is not necessarily always have to be normal. A quick price comparison, just so you can understand exactly what Solomon's Treasure offers. This is a recent stone that we had in our inventory, and the bottom one is what we've got. It's a 3.5 carat cushion cut, fancy vivid yellow, internally flawless, and our price on that would be $113,500 US. Well, there was a competitor who had almost the same diamond. It's very difficult to compare apples to apples exactly when colored diamonds, but theirs was 3 points more, but it was the same color, same clarity, same cut, and it was for $67,000 more. So that's one of the things that we bring to the table, is our pricing is extremely, extremely competitive. Which is very important on the entry point of diamonds, because it means that our investors are going to have a return and be able to experience appreciation much quicker. So I want to show you with every color, they all start out below white when they're first discovered. So you can see here on this slide, blues are up to 200 times what an equivalent white would be. Reds up to 160 times. Pinks up to 100 times. All of those, there have been investors that have purchased them when they were less than white. So now we've got yellows and champagnes, both which are much, much less than these other colors. So that's where we often encourage our investors to enter the market, is with the ones who still have significant opportunities for appreciation. The last slide here, the last couple slides, I'm just talking about rarity. 0.3 carats of colorless diamonds are discovered per 1.1 tons of ore mined. Okay. Now, again, I get to why the picture of the dump truck is on the bottom there. For every 10,000 carats of colorless diamonds, only 1 carat of color is mined. So quickly doing the math, it takes 37,000 tons of ore to discover 1 carat of a natural fancy colored diamond, and that would equate to 82 of these dump truck loads. So one step further, there's approximately 5% of colored diamonds that are mined that are of investment quality. The rest are more commercial and jewelry stores and industrial. Less than 1% of diamonds mined are free of inclusions, meaning that they're either flawless or internally flawless. And less than 1% of women will ever own a diamond of more than 1 carat. So if you put all of those factors together, my conclusion is, since our suppliers specialize in 1+ carat internally flawless, investment grade, natural fancy colored diamonds, I know that's a mouthful, Solomon's Treasure moves the earth to find the best treasures for our investors. Thank you very much for taking the time to take maybe your first step in learning about colored diamonds. I encourage you to talk to the partner of ours who invited you to tonight's presentation, and we can continue to get your questions answered.